Hey everyone, happy Thursday, July 23rd. It's about 12:15 on the West Coast and it's time for another market update. Well, I'm sure you've been paying attention to the news, and I'm sure you've seen that the war has basically restarted with Iran. It seems like there's strikes going back and forth, oil tankers being hit, threats being made, all those sort of things. And as we talked about, that is not good for rates. Over the last week, rates have actually pushed to the highest they've been since June. I think it was June 23rd, 2025. So right at about 11 months. So that's not a good thing. There's a little bit of economic data this week, but not so much that that wasn't completely overshadowed by this. And so that's all I'm really going to spend time on here. So if you can see here, this is the beginning or end of February when the war started. We were right about 6%. And then now we're up to 6.85%, according to this lender survey. So not good news there. It's been a pretty quick, you could see the beginning part right there was the big jump. And then ever since then, we've had a couple little spots where maybe it's going to, come down a little bit, but still heading higher. And like I've talked about before, a lot of that has to do with any sort of ceasefire. I don't think the markets are buying because this happens. Anytime it seems like hostilities have ended, time goes by, and then maybe a week or two later, new attacks start on either side, and again, the markets really here are focused on the price of oil. The price of oil, I think it went over $100 a barrel again today. Just not good things. That's bad for inflation. That's bad for us as consumers. Gas prices will go up. We'll spend less money. Bad for our economy. So overall, not happy to see that the war has restarted. But again, this is something going on and something we have to deal with. So hopefully they come to some sort of peaceful resolution here fast, and it's something that lasts because, like we just talked about, these temporary ceasefires, I don't think the markets are buying anymore, and we really won't get at least the mortgage bond market and U.S. Treasury yields and whatnot. And we won't really get too much relief just with a temporary ceasefire. To get back to that 6% number that we were before this started, the markets and so forth, they're going to have to feel pretty comfortable that everything is behind us and we're not going to have to deal with that again. So, very disappointing to see this is flared back up because, again, it has such a big effect where it's going on in the world, on our economy, on the global economy. So let's, keep our fingers crossed that it comes to an end as soon as possible. So again, not good. Rates have gone, all the way up to 6.85%. So that is, according to, like we talked about, this is a lender survey where they send out a survey to all of us lenders across the country, and they kind of give their their average, what their rate sheet would show for a good borrower, with really good credit, a big down payment, and so forth. So most people probably have higher than this. This is, unfortunately, 6.85 is probably for some better buyers without buying down. Again, last week it was 6.68, so a pretty hefty jump in about a week, and again, all because of what's going on with Iran. So, like I said, that's all I want to get into today because that's the most important part. Coming up next to, what would that be, Wednesday, the Fed meets again and ends their meeting and announces, if they're going to cut rates, if they're going to keep rates where they're at, or if they're going to raise rates. Because of what's going on right now with Iran and in the Middle East, right now it's at, I believe, 65% chance they don't do anything. They keep them where they're at, but 35% chance they raise, and that number is going up. So if we get another week of bad news coming out of the Middle East and more conflict and more attacks and stuff, then we're probably going to see that number creep up closer to 50% as we get closer to that meeting, and then it'll be kind of a coin flip what the Fed will do. I would say, given the new Fed president that's in there now, Warsh, that kind of wants to, at least coming in, wanted to get rates a little bit lower. I would think that he would really push hard to keep them where they're at. But again, if the data and everything going on in the world is pushing everybody else, all the other voting members the opposite way, it'll be hard for him to convince them otherwise. So fingers crossed that we get this war taken care of. Fingers crossed that the Fed does not raise rates next Wednesday. And then really, going into the meeting, if we kind of know that, hey, they're not going to raise rates are going to the Fed rate is going to stay where it's at, then the next most important thing is the press conference and the comments made afterwards to get an idea of what all the Fed members are feeling and where things might go in the future. But right now, things are going higher with mortgage rates, and that's not good. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.